Hey everybody, Patrick Sukup here with Sukup Real Estate Services in Fort Collins, Colorado. Lately I've been working with a fair amount of first-time home buyers, which makes sense with interest rates being as low as they are. But that got me thinking, how could I help them the most, and what are some things that I've come across in my career that either have caught me off guard or would have been good knowledge going in on the front end. A lot of this information you can Google it and find out for yourself, but hopefully your real estate agent can help you, and hopefully this 5 to 10 minute video can help you as well. When it comes to tips in real estate, I've broken it down to 3 areas: monetary, financing, and the actual real estate side of things. Monetary, or cash, could be broken down into down payment, closing costs, and reserves. When it comes to down payment, there are options out there that allow you to put 0% down, USDA and VA loans, to name a couple. And then there are also second down payment assistance programs, grants, but we're not going to get into that at this point. Right now, in general, for a conventional loan, you're required to bring 3 to 20% down. Anything less than 20% down, you would be required to pay private mortgage insurance. I remember my first house, buying it and being hit with the settlement statement a week of closing, and I was to bring an additional $5,000 to closing and had no idea where I was going to come up with it. I was already bringing money for the down payment and ended up having to borrow that money for closing costs. So anywhere from 1.5% to 2% of the loan value is what I would generally assume is a good number for closing costs. And finally, reserves. I would say the market that we're in today would tell us how important it is to have 3 to 6 months worth of reserves. At any time you could lose your job or be impacted, and still do not want to be put into a position where you have to sell your house, and banking on appreciation is not a good play. So always have 3 to 6 months worth of reserves. Getting into financing it, unless you're pretty darn wealthy and are able to buy real estate with cash, you are probably more than likely going to have to put a loan on the property, which is an amazing tool. Allows us to buy a $400,000 piece of property and break it down into affordable intervals every month for 360 months. But to do that, I would get quotes from your banker and a broker. If you have a really good relationship with a banker, they obviously know your financial background, could really help you through the process pretty easily. Smaller banks generally are amazing at that. First Bank, Bank of Colorado, Western States Bank are some smaller banks here in town that do a great job. But I would also talk to a mortgage broker. So the power of a mortgage broker is they can shop out to multiple different lenders, investors, loans, and can bring you back some of the best rates potentially and closing costs. But it would be absolutely important and imperative of you to do your due diligence and shop those a little bit, but also feel comfortable with the person that you're working with is also very important. Getting into budget, just because you're approved, you've got really good income, just because you're approved to a $600,000 house doesn't mean that monthly mortgage payment after putting the down money in makes sense for you. So just make sure that you're in a budget, a monthly payment budget that makes sense for you. And then the good old pre-approval versus pre-qualify. When you submit offers with your real estate agent, you'll be asked to put down either or supply a pre-approval or pre-qualification. Pre-approval are much stronger in the sense that you've probably already filled out an application with a mortgage broker or bank, and they have given you a number that you have been pre-approved for. Pre-qualification kind of, from my perspective, gets back to the old stated income and stated credit score. So pre-approval, they might actually run a hard check on your credit, and qualify, they might just give you a number based off of what you're suggesting is your credit score. My final tip when you're starting to be your first-time home buyer in real estate is the actual real estate side of things. What an amazing tool Zillow is, and Trulia, and Realtor.com, and ColoProperty.com, as well as many other tools out there online. Whereas in the past, there was the MLS books, and only real estate agents had access to that information. We today can generally hop online, see what's available in our town, what it's selling for, what it's sold for, what its Zestimate is, or any estimate on there. Realtor, Redfin all have estimates these days. Generally speaking, on a pretty cookie cutter home in a subdivision, those estimates aren't terrible. They're pretty close. So I suggest becoming an expert. Look at what you like, want, and need, and discover what those houses are selling for, what they were listed for, what they actually sell for, what the difference is there any negotiation room, how long has the house been on the market. Those things could definitely help. Selling season in Fort Collins is generally spring, summer, beginning of fall. More inventory will come onto the market, more opportunities to choose, more options to choose from. On the flip side, there are also more buyers to compete with. So considering the opposite, as far as not buying in the selling season, there are less buyers, but there are also less inventory. So you can be opportunistic that way. Interviewing agents. There's statistics out there that many people either list with the first agent they interview or buy with the first person that comes across their table. I would absolutely recommend sitting down either on the phone or Zoom for half hour, 45 minutes with an agent just to see what and if your values align. What is their background? Are they able to negotiate? Are they actually selling houses for a living? Are they in real estate for a living? How do they know the market? What is their background? Or are they just kind of moonlighting as a real estate agent to make those good commission dollars? And then just begin to hunt and see it as that. Don't conform. Don't be accepting of a house just because it meets some of your criteria, but really be on the lookout and be opportunistic. Maybe there's a 2-bedroom, 1-bath, but the square footage is 12 to 1,300 square feet. Maybe there's opportunity to add a bedroom, add a bathroom, really increase the value of the property, but also fit your family's needs. What if a 4-bedroom, 2-bath is priced right and you could come in there and add value? And so it's a little bit bigger of a property that you need, but because of the state that it's in, you have the ability to come in and provide value and actually potentially make some money on the deal too. But see it as a game, see it as a hunt, and align those 3 tools, monetary, financing, and the real estate. And hopefully that helps you buy your first property, be successful, and enjoy the process without getting blindsided by anything. Again, I'm Patrick Sukup with Sukup Real Estate Services here in Fort Collins, Colorado. Appreciate you watching.